Now, according to the book, and I know where the book was going with it, and I got to admit, Robert Kiyosaki is pretty good at marketing. He leveraged the network marketing organizations because, quite frankly, he was in the business, obviously, other than his real estate business, which real estate is a wonderful tax advantaged business that has all kinds of tax breaks in it. But he's trying to sell books. And if you want to sell books and you want people that have a culture of wanting to read books and share books and distribute them, go to the network marketers, right? So he called businesses, you own a system and you have people to work for you. Well, and then, the network marketers say, we've got a system. No. You are their system. There's a big difference there. You always got to look, whose system are you really working for? When I've trained agents regarding prospecting, I tell them that, when you look at the Project 200 thing, which is you write down names of 200 friends and family and everybody that's part of their prospecting because you are now a free source of leads for their returns. They are not helping you build a business that will help you to be continually sustained. They're helping you to get immediate sales so that everybody else looks good. But the way I look at this is that it is not a system. It is a system of systems, and you have people working in those systems, and those people are working for the business, not 1099 contracted people. You want people that are really building a business, you hire them, not contract them. So we look at someone like Jeff Bezos, and I've actually got a great clip of him, and I'll share that in a second here. But Jeff Bezos, what is it that he's been doing to allow Amazon to pay very little taxes? And I'm not talking about him personally. I got that clip somewhere else. Because personally, he will borrow against his own stock to get a loan and use it for whatever he wants, and then pay back the loan when he wants. That's how he can have lower taxes individually. By the way, everybody else can do that if you have stock that you can borrow against in an account that will let you borrow against it. So everybody can do it. The question is how big can you do it with? Elon Musk did the same thing when he bought Twitter, right? He borrowed against Tesla stock to buy Twitter. Very tax advantage. That makes them smart. But this was Jeff Bezos on The Tonight Show in 1999. This was just great. Here.
I understand. The company is worth billions.
Yes.
And every time I pick up the paper, each year it loses more money than it lost the year before. The company's never made a profit.
That's right.
Now, why? How does it? Why? How does that? Why?
Seems like a new math, doesn't it?
It does. Yeah. I mean, it's to someone who doesn't know anything about this. It's amazing. We lost $12 million last year, and we're doing great.
Well, there are a whole series of Doonesbury cartoons about this. This is not a new phenomenon. We are a famously unprofitable company,
right.
And we are investing in the future. It's not, which isn't unusual. Companies have done this before. What's a little surprising about Amazon.com is the scale to which we're doing it. We're doing it in a big way.
I see. So you just keep reinvesting.
We're reinvesting.
Now,
and so they're doing a lot of investing into research, investing in technology, investing in robotics and all of their infrastructure stuff, research and development, experimenting with new markets and things. There's all kinds of things. And that is all tax deductible expenses.